You dream in stars, then dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and brain. And Julie knows that fire in your soul, the kind that lifts the broken whole. James, you reach the skies no one dares. In your hands the future's caught unawares. That's to know what the hell were you thinking. You laugh as the yacht keeps the daylight blinking. Every day's a quest, not some disguise. With dreams in the storm, the dream never dies. Retired, you say, with a wink and a grin, but the podcast is rolling, pulling us in. Your compass is love, with your kids as your guide, shining seas wide, with vision and pride. Julie's here, who adores your spark, the dreamer who lights up the dark. James, you reach the skies no one dares. In your hands the future's caught unawares. That's to know what the hell were you thinking. You laugh as the yacht keeps the daylight blinking. Every day's a quest, not some disguise. With dreams in the storm, the dream never dies. Tethered lights to flying high. You kiss the stars, but never say goodbye. Not even gravity can pull you down. You're wild, the wave, the crowd. James, you reach the skies no one dares. In your hands the future's caught unawares. That's to know what the hell were you thinking. You laugh as the yacht keeps the daylight blinking. Every day's a quest, not some disguise. With James in the storm, the dream never dies.
All right, I think we're good. I think we are ready to go. Good evening, and how are we doing today? All right. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. What I'm looking for specifically is a simple, safe, predictable, consistent 1% per week. I know it comes over 50% by the end of the year. Nobody gets 50%. I know. I'm not looking for 50%. I'm not. I'm looking for 1. That's it. 1% every week. My hair looks terrible. All right. That's a little better. At least I still got hair. I'm in my 60s. I still got hair. I'm okay with that. All right. So let's see who's in the house today. Say hi. Hi. Oh, error sending message. Oh, no. There I am right there. Okay, why can't I see what's going on here? All right. I'm just going to leave it alone. Heck with it. Let's say hi. Who's in the house today? Who's in the house? Who do we have here? Oh, no. No. Come on. What's going on here? Chat. There we go. See who's chatting. Shouldn't that be me? That should be me right there. Uh-oh. Zoom user. Chat. All right. That works. Works. Everything seems to be going. Oh, wait a minute. I got one more recording to do. That one. Give me 1 second. Yes, I'm going to move the camera in a second. Give me a minute. There we go. And let's get this party started. Okay. I think that's it. Come on. Come on, come on, come on. I have no idea what that is. Why isn't this working? Connect plot first. Okay. Dividend stock title. Look, hold on. Chill. There he goes. We're running. All right. That's running. That works. Back over to here. Back over to there. Back over to there. And let's say, move the camera. Yep. Sorry, Den. All right. That works. All right. So who's in the house today? We have JJ. What's going on, JJ? Nice to see you. Down here, not yet. We're getting ready to go. All right. Who do we have? We have Andy Kingsmouth. Hey, I'm just going to call you Grow 45. 10 Gen, Sammy, Andre. 10 Gen wants to take a look at applied materials. Didn't even give me time to say hi to everyone. Wait a minute, I'm going to look at Oracle first. Then we'll take a look at applied materials. All right, let's slide over to a new page. Applied materials, you say, huh? AMAT. Applied materials. Going to come up in a second, all right? Who else we got? Robin Narstone. Okay. Zach, don't do it. Nice to see you again. Luann, nice to see you, Luann. Anthony, good evening, Anthony. Hassan, awesome. Joe, Jesus, good evening. Thuman, Paul, Biggs, Takis, Sammy, Cam, good evening. Oh, what's going on there? I have no idea what's going on with that one. All right, Dean, B, Jaffer, Tim, good evening, Dean. Don't do it. Good evening, Jade. Crypt Tip, okay. What else do we got? JV, John, Jerome, Dean, wait a minute, why Beat Entertainment? Okay. Fernando, take a minute. Teflon, Mali, good evening. Vitali, Mood, Christian, Jesus, Ami, Jamal, Overhead. Christian wants to take a look at VIX. Dude, you're definitely in the wrong place if you want to take a look at the VIX. I'll take a look at it. You got to give me some kind of idea. What are you thinking? Seriously, what are you thinking about the VIX? BRO. Okay. Trey, Hutch, Pasha, Niamanti. Okay. Christian, 30-day DTE. Okay. Prince Esteban, Sweet Den. Esteban, Bank of America, huh? BAC. We'll take a gander. Who do we have over here? Over here. We have Southeastern, Jasmine. L, what's going on? Kazimad, all right. User Senor Mike, Cool Cats. Ooh, Cool Cats. All right, Nick, Rose, Manilow, Antoine, Kevin, Sammy, August, Romara, okay. Nick, Tin Man, okay. Did You Soup? That's a strange name. What were your parents thinking when they named you Did You Soup? D&D Trader, ooh. Jerry, BRKA. BRKA. All right, we'll take a gander at it. Crypt Tip, AJ Million. Wait a minute. I'm what? I'm the real fan. All right, I'm the real fan. All right, that works. Jamie, what's going on? Boss Man. Walrus, Golden Space, Nona. Don't do it, TSLL. Just give me a couple seconds. Still saying hi to everybody who's in the house today. All right, who do we have over there? Rip G, what's going on? Grimace, what going on here? Grimace, we're looking to invest for a simple, safe, predictable, consistent 1% per week. Yeah, I know it's over 50% a year. Nobody gets 50%. I've heard it all before. Come up with something new. Greg, nice to see you. Terry. C-Bub, what's going on? Nice to see you again. Sully, nice to see you, Sully. Ernest, Hugo, Brian, Johnny, and Beowulf. Okay. What do you think about Take Two Interactive? TTWO? TTWO. We'll take a look at it. All right, Bay? GD, nice to see you. Pex, nice going on. All right, so we said hi. JC, nice to see you. Nick, what happened to Walmart? Oh, let's take a look at Wally World. Okay, we got 10 already. WMT. Give me a couple of seconds. We got 10 to look at already. All right, so first thing we want to do is we want to look at Oracle. It's already on the board. Why not, right? Uh-oh. Rubix. Good evening. WRBY might be worth a look next week if it finds its support this week. WRBY. Eat kiwi with skin. Absolutely. All right. I think we're done. Good evening, WRBY. We'll take a look at that one. How do you end up on both screens? That's weird. All right, Lulu. Alta. ULTA. All right. Let's get the ball rolling. First thing I want to look at with any stock, anytime at all. Any. Who do we have ahead? John Turk. Good evening, John. You're new here. Nice to see you. So anytime I look at anything, I always want to start the same place. Okay, 1, 2, 3, A, B, C. Fine. Let's go step by step by step. First step is to accumulate a list of stocks that you like. This week, there's 11,614, something like that, a whole bunch. So that being said, which stocks are you looking at? Now, I look at the same stocks over and over and over again, only about 350 of them. That's about it. I'm going to pause these right here so I can watch those as they progress. So, first of all, find what stocks you like. Second, I throw them into the calendar to tell me what stocks am I looking at this week, because I don't look at every single stock every single week because they all move differently. Okay, so IBM might be doing this, AT&T might be doing that, Home Depot, Lowe's, Comcast, all those other companies, they could be doing something else. So I only want to look at the ones that are pertinent to me this week. Okay, so here we go. Oracle, I've been watching this for a while and I do have some. So the 5 things I'm looking for every time I see a chart. Always 5 things. See how quickly you can find them. The high of the year. The low of the year. Where was it a year ago? Where is it right now? And then where is the money flowing? That's easy to see, especially right here. Because this right here, right now, is what we're looking at. The low of the year was a month ago, and you can't get any lower than the low of the year. Because you've heard it over and over and over again. Make money in the stock market, you buy low, you sell high. What do? They go up, down, 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 up, down. That's all they do. They go up and they go down. Where are you jumping in? Where are you jumping out? Don't get me wrong. You can buy and hold it forever and ever. Great. Have fun with that. Not me. I like to buy, sell, because I'm trying to create cash flow. All right, I'm 62, I'm retired. I'm not looking to buy something and hold it for the rest of my life because who knows how long that's going to be. I need the money now so that I can pay my bills as I progress going forward into the golden years. Wonderful. All right, so once I find the 5 things, high, low, was, is, where is it going? Next, I want to take a look at, is this going to be financially feasible for me? That means if I buy it, turn around and resell it, can I get my 1% this week? Well, we have 2 days left for this week, so it doesn't make sense to do an option trade for this week. So we're going to look at next week, and next week is not the 28th of August, it's the 4th of September. So let's get rid of 28 August and look at 4 September. Wait a minute. We might get it out of this. Hold on. 148. It's at 151 now after hours. 151. Okay, we'll get our 1% this week. Yeah. Let's do this week for this one. Next. Gonna need the glasses for this. Glasses. Yeah. I didn't need these when I was younger, but now that I'm older, I do need them. How the hell do I see through these things? Don't get old. It's no fun. Oh, don't get me wrong. It's fun that I get to do whatever I want to do. But the part that's no fun is everything starts to fall apart. Yeah, the older you get, the more things fall apart. All right, so I want to look at this area right here. What's happening right here, right now? Does it look like it can stay above the 151 by this coming Friday? Where are we? We're doing 26, right there. Here's our last 30 days. That's easy to see. Take a look. It's easy to see. Watch. The top, the bottom. Where was it? Where is it? Okay. Up, down, up. Well, that's easy. Where's it going next? It's going up. It's easy to see. How long? Well, who knows how long it's going to go before she goes up and then goes back down again? Because stock right here, 115, it went up to 160. That's a $45 increase. From here to here is $45. And that was 1 week, 2 weeks, 3 weeks. So it jumped up in 3 weeks. A little bit of profit taking. Now she's going back up again. Okay. Well, at the 150, that's where we are right now, the 151. Let's do the 150, 250. Because we're here now, and it looks like she's going up, and the 152 is only right there. It's not that far away. So why not? All right, so let's slide this over right to there. We're going to do the covered call because I want to buy it and sell it the same day and wake up with some kind of a profit. There it is right there. Bring this down. This will be save number 1. What are we doing? Oh, wait, we want to change this. I got to change it so everything fits on the screen, right? Why isn't that filling in right? Okay. 150, 250. There we go. All right, there's that. Pull it down to there. We're not seeing the whole thing. Why are we not seeing the whole thing? Damn. All right, is what it is. Let's save it. Save it. This will be number 1 for the evening. All right, right from there all the way down over to there. Okay, and we're going to save this one as 826 2026 number 1. There we go. First one of the evening. Yes. And let's bring up the calculator to find out what our rate of return is. Okay. Bring that over to there. Now, to find the rate of return, we take the profit divided by the investment to give us an idea of what our rate of return is for this week. Well, there's only 2 days left. Tomorrow and Friday. Can the stock do what I want it to do in 2 days? Well, even if it doesn't, do I at least want to own the stock? Because if it doesn't do what I want it to do, I'm going to have to hold on to it. All right. Oracle, the 152s. 304 is the profit. 15,000 is the investment. So what is my rate of return here? All right. Damn glasses. Damn glasses. All right, 304. 304 divided by 14,946 gives me a 2% profit. Think about that. Hold on a second. Hold on. If 1% every week comes to over 50% by the end of the year, what does 2% come to? This trade right here, jumping in tomorrow morning at the current price, selling the covered call, collecting 2%, and then I can do it again next week. Can I get another 2% next week? Maybe 1%. But 1% every week is over 50% by the end of the year. 2% is going to be over 100% at the end of the year. And I'm okay with 2%. I am. All right, so what are we looking at? Let's get this in order. In order. Okay, this is what we got from this week. Sunday, Monday, Tuesday. Today's Wednesday. There it is right there. All right. All right, that's Sunday, that's Monday, that's Tuesday. Let's do Wednesday. Right there. And right there we go. Wait a second. Like that. Wow. All right. Right about like that. Wow, where the hell did it go? There it is. Hold on, I just got to get this thing in the right place. There we go, right there. All right, that's it. Here we go. Right there. One cut. No. This one. There we go. One covered call. Oracle. ORCL. If you like Oracle. 28 August. That's 2 days away. That's this Friday. 2 days. The 152.50 call option. We're currently sitting at 150.79. Can it hit 152? Maybe. Maybe not. 304 is the profit. 14,000 is the investment. And that's a 2% return if you like Oracle at this current price. Lucky, nice to see you here today, dude. On time, I see. Well, close to being on time. Whoops. There we go. Nice to see you, Lucky. All right, 2% for Oracle. Oops. No. Right there. There we go. All right, that's it right there. Got to make sure they line up, you know what I mean? Right there. There we go. There and there. O-R-C-L, Oracle. Whoops. $2%. All right, that's Oracle. Number one for the day. All right. That's number one. Let's see if we can find another one. What else do we have? All right, we just did Oracle. All right. Trying to make sure I get all these questions answered. Thank you there, Mr. Lucky. WRBY. WRBY. What the hell is WRBY? WRBY, you say. WRBY. Warby Parker. Okay, it's going to be a no, but all right, we'll take a look at it. So look what's happening here. The top, the bottom, where was it? Where is it? Down, up, down. Simple, just down. Say down, up, down. No, because it's dropping at the moment. Let's zoom in a little bit so you can see it a little bit better. Okay, here's your last 30 days. The top, the bottom, shoots up, pulls back, shoots up, pulls back. Okay. No, it's dropping at the moment. If you really like it, wait another week or so. Because maybe by Friday we'll find a bottom and then she'll turn around. It might be good for Monday. Now, I have no idea who WRBY is, so it's really not on my list. So it is what it is. Lucky question. If you know that the stock will go up, will still pick 1 to 2% pick for more premium. Well, Lucky, it's always going to be a numbers game. Number one is, well, do I like the company enough to put my money into it? Number two, what is my outcome? Now, my outcome is 1% every week. Okay, you and I haven't had a chance to chat yet, so I really have no idea what your outcome is. But it's always going to be the same. Once you figure out what it is you want out of your investing, and don't just say you want to make money, be a little bit more realistic. The better question, the better answer you come up with, the easier it is for you to find a strategy that's going to work for you. Now, this strategy here, it's slow, it's boring. Okay, there are other people out there that make a hell of a lot more money than I do. But the thing is, I'm not motivated by money anymore. I'm motivated by peace of time and the art of doing nothing. I could sit around and do nothing all day. I actually worked out in the garden today, lounged in the pool for a bit, and then just watched the grass grow. I thought it was great, and I did take a nap in the middle of the day. I find that wonderful. All right, so I'm going to say no to this one only because she's dropping at the moment. I really have no idea who they are or what they do, but I hope that answer was good enough for you. All right, next on the list, Applied Materials. Here we go, AMAT. AMAT. It's going to be a no, not a no as in no never, but no, not this week. Okay, but it might be good for next week. Let me show you why. Remember, always, a chart, always 5 things. The top, the bottom, where was it, where is it, and where is the movement going? That's easy. The 479, let's call it 480. Okay, the 480 is going for 6. That's over 1.5 points if you like this company. But let's zoom in and I'll explain to you why it's a no for this week. Okay, so the last 30 days is basically right there. Okay, the top, the bottom, where was it, where is it, down, up, down. It's coming down at the moment, but this is going to find a bottom here soon. And as soon as she finds the bottom, she'll turn around and go back up. So I am going to put Applied Materials for next week because I love Applied Materials. I do. There's one of those Dividend Kings, consistently profitable, that type thing. So Applied Materials, AMAT. Gotta love that one. That one's for next week. We'll take a look at that one. Okay. If you need to roll, how far can you roll a stock? Because a time will come when you don't get a premium. Lucky, you're absolutely 100% correct. So you want to know how and when to roll a stock? Well, it's easy. Look at this. Okay, the option, 28 August, that's this Friday, 2 days away. This is 4 September, that's 9 days away. 11 September, 16 days away. 23 days, 30 days, 37, 51, 86, 295, 842 days. You can roll it all the way out until December 15th, 2028. Look at this. This is cool. Watch this, Lucky. Let's say, hypothetically, you need some money for a wedding, an operation, or something like that, and you don't want to sell your stocks. Well, great. The stock's at 379. Let's call it, 479, 480. Check this out. So if I bought it today or tomorrow at 480, and then I really wanted to sell this to pick up some cash, the 480 is going for 181 per share. Lucky, you got that? 181 per share. But you got to hold it for 2 years. Think about it. Hold on. Okay. So if I bought it today, 480, it's 479. Let's call it 480, okay? I can sell the covered call all the way out to 15 December 28. And I can pick up 181. 181 per share. That is a 25, almost a 25% return, but it's for 2 years. Is that right, 2 years? No, 2028. Yeah, just right, a little over 2 years. Lucky. So if I bought it tomorrow morning at that price, I could sell somebody the rights to buy it from me, the exact same price I paid for it, and push it out 2 years and pick up $181 per share. So for the fun of it, let's do this. Let's see how much that actually is. All right. So if I bought it tomorrow morning, 480. Okay, and 181 is the contract. Okay, per share, 181 per share. So to find out the rate of return, we take the profit, 181, and then we divide it by the purchase price, 480. Okay, divide 480, and that will give me a 37. Lucky. 37%, but it's for 2 years, which means you can't do anything with that stock for 2 years. Who cares if it goes up or goes down? You like the company, here's the thing. You like the company enough to buy it in the first place. You sell a covered call 2.5 years out, you pick up 37%, plus you pick up all the dividends along the way. Now, granted, you can't do anything with it. You set it, forget it, walk away. What do you think? Oh, holy cow. Look at that. I found my other one. I thought I lost it. Cool, it works for me. All right, there you go. I thought I had to buy another one. So lucky, did that make sense? I could buy it, push it out 2.5 years, pick up 37% and do absolutely nothing. Granted, if you did it every week, that's 50% a week. 50% a year. That'd be a double or 2 years. So do you want the guaranteed 37% or do you want the possibility of 100%? Because 1% every week for 2 years, well, then you're doubling your money. But here, covered call, simple, safe, walk away, and you get 37, 38%. I thought it's cool. Anyway, next. Oh, so what did we decide? Yeah, we decided to wait a little bit on this one because she's coming down. But I am going to put applied materials on the list for next week. I am in. How are you doing today? Nice to see you. Yes, so why not after 2 years I don't sell for 200? I don't understand that one. Yes. So why not after 2 years I don't sell for 200? I'm lucky you're going to have to explain that just a smidge better than that. Okay? That doesn't really make very much sense. Okay? All right, that being said, doing good. What about you? I'm doing awesome. Thank you for asking. All right, so let's get to the next one. Next one, VIX. What is your idea with the VIX? No, I know what it is. VIX is the volatility index, but we're doing covered calls for weekly cash flow. What do you think the VIX is going to do for us? All right, here we go. The VIX. Okay. All right. The high, low, where was it? Where is it? Now, the VIX is not really a company. It's more or less the volatility index. So how volatile is the market? Well, we're way down here now. 15. Okay, so if I bought it at 15, which is where it is now, 15.21, I could sell the 15s and pick up 91. Well, that's nice, but what do we know about the VIX? Well, the VIX doesn't have any dividends, and the VIX doesn't really have any products to sell. And the VIX is nothing more than an indicator of what's happening in the stock market. So I'm not 100% sure how the hell to play this one. To be totally honest with you. I'm not going to blow smoke, but, hey, it has no product, which means what the hell are you supposed to do with it? But I am going to question that. Six days, the 22nd of September. All right, that being said, next. I don't know whoever came up with the VIX. You really got to give me a better idea of what you're thinking going on with that one. What is your thought? Okay, BRO, just to let you know, that's going to be a flat out no. September, October, December, March. I don't do monthly options. They just never, ever, ever work in my favor. So I just don't do them. Sorry. Next. Bank of America. BAC. BACATION. In the summertime. All right. The high, the low, the was, is. Look at this. Up, down, up, down. What's going on right there? 62.23. The 62s are going for 50. That's going to be a hell no. That's only 2 days. We don't want to do 2 days anyway. Next week, what does next week look like? Next week, 62s are 85. All right, that's just 1%. But what's happening right there? let's zoom in and see what that looks like. Yeah, I'm not too happy with this one. The top, the bottom, where was it? Where is it? Look at this. Up, down, up, down, up. But today was a down day. So the top is there, drops, finds a new bottom here, shoots up, but pulling back today. No. No, thank you. And it's too close to the high anyway. The high of the year. All right. Next. Okay, BRK.A. What the hell is that? BRK.A. That's nothing. I don't know who came up with that one. TSLL, I like that one. TSLL. Now this is the ETF that's hooked up to Tesla. If you like Tesla, all right. Top, bottom. Where was it? Where is it? Look, it's up, down, up, down, up. What's going on here? The $9 is going for 30. Oh, hell yeah. Yeah, I'm going to write that one down. TSLL. The only reason is because I like Tesla. I mean, not that they have dividends, because they don't have dividends. I mean, I dislike them because they don't have dividends, but it's still one of those companies that you just can't get away from. Where are we? Where are we? Okay, we did that one. TSLL, we just looked at that one. All right, next clip, same old. Maestro, Mood, Jack the Man. What's happening? Jack the Man. Lewis. What's happening, Lewis? All right, so TSLL, let's zoom into that one. What's going on there? See if that makes sense. All right, I have no idea who that is, but you want to look at Colgate Palmolive? All right, we'll take a look at that one. Hold on. So we're going to say no to TSLL for this week. That's simple to see. Down, up, down. No, next week. Next week, TSLL. Take two. TTWO. TTWO. What's going on here? What is that? What's that all about? 233. Oh, wow, that looks nice. But who are they and what do they do? All right, hold on a second. Lucky. If I buy now for 180 after 2 years, why I don't pick to sell the 200s? Lucky, that was 480, not 180. 480. Okay, yeah, that would be the 500, yeah. Big Robert, what's happening, Big Robert? BRKA's Berkshire Hathaway, please do I need to figure if it's a safe to sell? Rusty Duckling. Well, because I looked under B, all right, BRK.A. BRKA. All right, enter. Can't find that symbol. Don't ask me why, just can't find it. Try it one more time. B R K Berkshire Hathaway, right there. Okay, Berkshire Hathaway. Here's the top, here's the bottom, here's where it was, here's where it is. Up, down, up. Got a little bit of a down today. Okay? I'm going to say hell no. And the reason why I'm saying hell no, check this out. 99 contracts today. 99. That's not even 100 contracts sold today. So no, it's like the market. What are you going to do? Call them up and say, hey, can you come to the office today and make a trade? 99? That's it. 99 traded today. No, that's ridiculous. $700,000 for one share? No, thank you. Next, Wally World. We got a couple people wanting to look at Wally World, WMT. Okay, kind of stagnant at the moment. We're waiting for this gap to fill, bottom off of that one. Up, down, up, down, up. Okay, what's going on? Okay, 5 things, right? Top, the bottom, where was it? Where is it? Up, down, down. Okay, not this week. Let's zoom in, see what is stalling. What's stalling? See, it looked good a couple of days ago, and it started to go up, but yesterday and today, it's starting to pull back. So what's going on with Walmart? Big drop. I'm assuming that has to do with the earnings. Okay. Now, this morning, we saw positive earnings, and the stock went down. How do you figure that one? So, no to Wally World, WRBY. This is where we say, what the hell is WRBY? Okay, it's a no. It's dropping. No, WRBY. Last on the list here, ULTA. ULTA. Alta. I don't know why people want to do stocks over $600, $500. 530, 543 bucks. All right, hold on. It's the same thing. Top, bottom is up, down, up, down, up. Okay, so she's going up right there. Let's zoom in, see what that looks like, and see if it actually makes sense to do that one. We want 724. There it is. Well, that looks like a yes. Up, down, up. Okay, it's at 543. I at least want to get $5, but it's offering me 545, $21 per share. Okay, well, let's look at it. I feel a little awkward doing this one because it's $500 a share. Who do we have here? Who do we have? Miss Ambitious. Good evening. All right, so ULTA, going to need the glasses for this one. All right. There we go. Covered call. There it is. Let's do the 545. There it is. One contract. There that is. Slide this one down to there. Snip it. Snip it good. Do. All right, here we go. All right. Snap that clip. Save this one. This is number 2 for the day. 826, number 2. 826, 2026, number 2. There it is, right there. So we're going to save that one. Bring this back up. See what the rate of return for this is going to be. Anybody want to guess? 2,600 is the profit. 51,000 is the cost of the trade. So let's put the calculator. Put the calculator to work. $2,601. That's the profit for one contract. Just one. Okay. Want to divide that by cost of the trade, including commissions and fees. 51,899. Let's call it 52. Come on. Divide 52,000. Gives me a rate of return of 5%. But now you have to ask yourself the question. Ultra Beauty. Who are they? What do they do? Are you okay dishing out $545 per share? That's a $50,000 for one contract. So for one contract, it's $50,000, but you're getting a 5% return. You know that old saying, it takes money to make money. Well, there you go. All right. I'm going to save this one because it's 5%. Not that it's a tip. It is not a tip. It's not advice. It's an observation. Do you understand the difference between the two? Okay? A tip or a suggestion, that's me telling you this is a great idea. You should do it. No, I don't do that. Somebody asked me about this, Doc. I plugged in the numbers, and that's what came up. It's not a tip. It's not advice. It is an observation. If you like the company, check out and see, is it worth your time, your effort, your money to put your money into this company? And would you do it to hold it long term? Uh-oh, I am in. Can you coach me? Like, it would be a huge boost for me knowing that I'm learning finance alone. Even a 5-minute call per week where I ask some questions would be really great. That's exactly what we do. I actually have a morning trading group. It is a paid service on a monthly basis. You can join that right on the website And then you can ask me whatever questions you want 5 days a week. Whoops, who do we have here? Biggest Chase. Nice to see you. Thanks for joining in. All right, so we're going to do this one. Put this over here. Put it right there. While that's loading up, let's clean up the computer. 5%. That's nice. Not that I'm going to do it. I don't put that much money into one single position. At least not this point in my life anyway. All right, here we go. ULTA. Alta. All right, whatever. Here we go. Here it is. One covered call, Alta, ULTA, for September 26. The 545 call option. The stock is currently at 545.99. So this is one of those situations where you buy the stock, sell it for less, and still walk away with a 5% profit for, what was that, 2 days? Oh, sorry, 1 week. Okay, 4 September, that's next Friday. Who do we have here? Anthony! Anthony, how you doing? All right, so $2,600 is the profit. Cost of the trade, including commissions and fees, is $51,000. Now, $51,000 is a bit much for most of you. It's a little bit much for me. I wouldn't do it either. But here's the thing. Some of you are in that position. I'm not. But if it makes sense, you need to ask yourself some hard questions. Is this a company in which I feel comfortable putting my money into it? It does not fit your strategy, but what do you think about FN? You know, I can go shopping and find the coolest pair of boots, you know, cowboy boots, really cool, nice jacket, awesome jacket, love it, great. If it don't fit, it don't matter how good it looks. Don't fit, it don't fit. But anyway, it's always going to be a personal choice. Does it make sense? Is it something you feel you can buy and jump into and not worry about it? Because are you safe with the money that you have? That's the idea here. All right, so 5% if you like this company. 5. All right. That's number 2 for the evening. What do we got? What do we got? What do we got? I asked you 3 times. What do we got? What are we looking at? What? Okay. Really? FN. You really want me to take a look at FN. All right. FN. Doesn't fit, but let's take a look anyway. Hell no. There, I took a look. It's a no. Sorry. I don't do monthlies. The numbers just don't work. September, October, November, December, January. Those are months of the year. They trade once per month. No, I trade weekly every single week. Not every day, every week upon week. What stock are you looking for this week? Pack, dude, tomorrow's Thursday. That means that my week is over for this week. The better question would be, what am I looking at for next week? Rusty, GLW, overvalued or rippling? Okay. GLW, isn't that Corning? GLW. Okay. The funny thing about Corning, think about this for a second. Hold on. Corning, they make glassware, plates, and cookware. Once you buy one, they last forever. My mother still has Corning ware from the 60s. So why would I go out and buy more? You know, well, it's like if you're going to go to a company, I want to do something that, you know, breaks and then you have to replace it. All right, anyway, Corning, here we go. Over this way. Okay, the top, the bottom. Where was it? Where is it? Look at this. Up, down, up, down. Not quite so lovely, is it? Last 30 days. What are we looking at? Well, look at this. The top, the bottom. Where was it? Where is it? Down, up, down, up. So we have 2 days up from the new bottom. Okay, 30-day bottom shoots up. Profit taking brings us to here. Here's the turnaround right there. Up 1 day, up 2 days. 152.78. The 152.50s are going for 590. If you like Corning, let's do Corning, number 3. Corning. glasses. The 155s, there it is. There it is. Drop this down here, take a quick picture. For prosperity, of course, so people know. Oh, for those of you that are on the email list, you'll get the email of these 5 that we come up with. There it is. All the way down to there. And there we go. Okay, 826. 826, 2026. Number 3. There we go. We got 2 more to go. Calculator, what's the rate of return here for Corning? Are you ready? Okay, Corning, the 155s, 571, 15,000. Let's check this out. You ready? 571, max profit. 571, and we're going to divide that by the cost of the trade, including commissions and fees. 14,920. Let's just call it 15,000. Can we do that? It's 14,900. Isn't that close enough? All right, divide 15,000. 15,000. 3.8. Oh, I like 3.8%. 3.8. 3.8 is quite great. Let's do this. Uh-oh. Here we go. That'll work. Okay. Let's clear this up. 3.8 is great. Here we go. GLW. GLW. There it is. Nice. What are we looking at? 355. Okay. 155. All right. All right. 1 covered call. GLW. Now, don't ask me how they got Corning out of GLW, but it is what it is. Corning, GLW. For September 26th, that's next Friday. The 155 call option. We're at 154.88 at the moment, so it's not that far to go. All right. 571 is the profit. 15,000 is the investment. For what was, damn it, what was it? Point something, wasn't it? 3.8. 3.8. Whoops, slide that one over. And here we go. Here's Johnny. Ryan! Nice to see you, Ryan. Oh, Hewlett Packard. Really? Way to go there, Ryan. Hewlett Packard, HPQ. HPQ. Ooh, nice. Check this out, Ryan. You ready? Okay, the top, the bottom, let me get out of the way so you can see it better. All right. Top, bottom, where was it? Where is it? Down, up, down. What's going on right there? The 30.50. Oh, hell no. Sorry. Sorry, Ryan. Now, don't get me wrong. I like Hewlett Packard. I do, but look what's happening. Last trade today was 30.50. After hours, 27.78. So actually, it's dropping. So that's kind of my cue to say, no, thank you. Sorry, dude. I mean, it looks good. Look at it. Okay? The bottom, the top, where was it? Where is it? What is it? Up, down, up. It's definitely going up based on this chart, but after hours, it's coming down. Sorry, Ryan. But I do like Hewlett Packard. I do. Oh, thank you. Okay, Shreet said GLW is glassware. GLW, glassware. That's where Corning came up with that one. Yeah, is for Gorilla Glass. Yeah, I get it. Thank you. All right, Grim, thank you. Glassware, thank you. Solar panels as well? Really? Oh, cool. Colgate Palmolive, you say. CL, one of my favorites. Dividend King. Yeah, 5 decades. That's 10, 20, 30, 40, 50 years. Increased profits. 5 decades. That's always on my list. Anytime a Dividend King comes up, I never, ever, ever check the fundamentals, because there's no way you can be a Dividend King unless you're a pretty damn good company. Because 5 decades of increased profits, well, hell yeah. All right, so Colgate Palmolive. Give me a second. Top, bottom, where was it? Where is it? Down, up, down, up. What's going on right here? The 92s are going for 120. That's good for a 1.5%. But what's the last couple of weeks look like? All right, so what happened on Tuesday? Okay, look at all this. Monday, there's bottom here. Monday's one day down, day up. No real direction, kind of like channeling, so no to Colgate Palmolive. Sorry. I mean, I love the company, I do, really. But it's just not the right time. Look at it, it's all messy. No real direction. Sorry. Darren, nice to see you. Thanks for joining. Very true. Right now, after hours is unattractive. I bought it earlier today. 4 point. Nicely done there, Ryan. Dream State Finance. Dude, I don't do Forex. You're just wasting your time. Sorry. I don't do Forex. Next. Okay. What are we going now? All right, let's go to the board and see who we have. All right. Questions. All right, here we go. What do I think? We did that one already. We did that one. Alex, nice to see you there, Mr. Alex. Wow, way back here. All right, here's Alex, Pablo, Flex, Sherry, Miss Sherry. Good evening, and how you doing today? Peggy, Richard, Digital Candy. Ooh, Digital Candy. I like that name. Think about it. That's a cool name. Digital Candy. Ooh, why didn't I come up with that one? Jason, nice to see you. TD London, good. Ed, Bobby, Tony, what's going on? Keith, nice to see you. Bob the Fish. Explain to me, how do you come up with that name, Bob the Fish? Bob the Fish, okay. Lisa D, nice to see you. Danny, Pasquale, good evening. Larry, Sue, how do you do? Ruben, nice to see you. Patrick, Rob 73, Ted, Metal Face, really? Fly with diarrhea, really? What kind of, all right, whatever. NGO, what the hell is NGO? NGO. Nope, sorry. Nick, Richard, Roman, Abe, what's going on? They sell real estate. That's a weird name. It's like, what were your parents thinking when they named you that? NVO, okay. NGO, and he wants to take a look at NVO, okay. NVO, interesting. No, not this week anyway. All right, take a look. Just take a look at the numbers. Top is here, bottom is here. We were here a year ago, and we're here now. Up, down, up, down, up, down, up. In what's happening today. Let me zoom in to show you why it's a no for today. Okay? The top, the bottom, got a little gap there. That gap will fill eventually, but look what happened. Bottom here, up, down, up, and today was down. She gapped up yesterday, so now she's pulling back. So not today. Not this week anyway. Okay? That's a no-no. Where do you go, Ray? Absolutely. Okay, MK intact. Okay, J. Oh, Taquino wants to take a look at coals. I got some coals this morning, Taquino. I did. Okay, what's going on? Look at this. What's going on there? Let's zoom in. Are you ready? The top, bottom. Where was it? Where is it? Look at this. Up, down, up, down. All right, what's happening right there? Now, like I said, I did jump in. We're at 1794. The 18s are going for 49. That's over 2%. Let's do coals because I love coals. Okay. Duncan, nice to see you, Duncan. Thanks for showing up. Uh-oh, Brader Trader wants to take a look at Starbuckies. All right, here we go. You ready? So look at Kohl's for a second. Top, bottom, where was it? Where is it? Look, it's up, down. Now she's sitting right here. Okay, she bottomed out here, 2 days out, pulled back, and then she gapped down today. Big gap down today. But then she shot way back up to right where we are. So I think she's going to keep going. So I'm going to do the 18s. Let's do this. Number 4 for the day. Kohl's. Going to need the glasses. Covered stock. There we go. And I want to do the 18s. There it is right there. Let's get our little... Oops. No. That there first. Bring it down to here. Do my little snip. There we go. A new one. From here to there. From there to here. Funny things are everywhere. All right. This is 8262026. Number 4. Number 4 for the evening. And what's the rate of return here? To find that out, we need the calculator. And we're going to do the rate of return, 1730. Okay, check this out. Are you ready? Okay, Kohl's, 24 September. That's next Friday. The 18 call options, we're currently at 1824. 1824. Think about it. Hold on a second. Now, I say this every night, but I still think it's funny every time I say it. I'm going to buy it at the current price, 1824. 1824. And then I'm going to turn around and sell it for less than I paid for it, 18. And then I'm going to walk away with a 4% profit for 1 week. Now, my goal is 1% per week. But this trade right here is offering me 4% to sell it for less than what I pay for it. I'm trying to figure out why people don't understand that. It's freaking crazy. Buy it for 18. Wait, 1824. Sell it for 18 and walk away with a 4% profit for 1 week. Now, I'm only looking for 1%. But this one's offering me 4%. And yes, we did buy some of this. I think I bought 5,000 shares yesterday. But got a nice fat premium on it, which is what I was looking for. All right, so we're going to save this one because I like 4%. There we go. Slide that over there. Drop that down to there. Pick this up. There we go. Alrighty. So let's clean up the computer while that's loading. Okay, complete is queued. Whoa, what's that? Uh-oh, prove that I'm human. I love these things. Every once in a while, when you're doing live shows, they always go, prove that you're human. And you're going to do, anyway, a little puzzle. All right, so here we are. Kohl's, K-S-S. All right, yes, that is a K. Okay. Here we go. There she is, right there. Okay. One covered call Kohl's for September 26th. That's next Friday. The 18 call options. This is what I find really funny every once in a while when I do this. The current price, $18.24. So if I can buy it for $18.24 tomorrow morning and I sell it for $18, I'm going to walk away. That's not a huge profit, $70, but that's $70 per contract. So each contract I get, that's $70. Well, each contract is only $1,700. Let me see if I can explain it in another way. Okay? Let's say, hypothetically speaking, you could buy a vending machine for $1,700. See? $1,700. Then you take that vending machine and you put it on the street, right next to CVS or Lowe's or somewhere. Every week until I sell it, it's going to give me a rate of return. It's going to give me some cash. What's never going to change is the price I paid for it. But what is going to change is its value. It's just kind of like a house or a car. Every year, every day, they go up and they go down and they go up and down in value. But is it still giving me the original intention? So if you buy a house, the original intention of a house is shelter. Get yourself or whatever out of the sun, out of the weather, the sun, the rain, the snow, all that kind of nice, neat, fun stuff. And whoever you either rent it to is going to pay you every month, so you're getting a rate of return for however much money you put in. So if I put in $1,700 per contract, and let's say I do 5 contracts, well, that's 5 multiplied by that. So that's $350. Not that big a deal. But more importantly, the rate of return. What am I getting for my efforts? Which one was this? 4% for 1 week. Hey, 4 for 4. This is the 4th one, and it's giving us, okay, and whatever. Yeah, I know. It's one of those things. All right. We're looking for number 5. 5, 5, 5. Let's sing a song of 5. How many is 5? All right. Who do we have? Duncan! V-Shreds. What's going on? How you guys doing today? Nice to see you. Brader the Trader wants to take a look at Starbuckies. Oh, I love Starbuckies. No, I don't drink Starbucks. Only thing I get at Starbucks is the frozen mocha cappuccino. It's kind of addictive. It's like I get the super duper one. All right, Starbucks, okay. SBUX. I'm going to say no. Now, don't get me wrong. I like Starbucks, I do, but look at where it is. No, not that it can't keep going up. It can. But look, the bottom is here at 77. And we keep going up, 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 up. Now we're at 108. But look at that mess right there. What's really going on? Okay, the last 30 days. Okay, that's easy to see. It's an upward trend. Okay, up, down, up, down. Now she's going up. The 108s are going for 185. If you like Starbucks. Damn it. Part of me says yes and part of me says no. But Brader the Trader wants to see this one. All right, well, let's do it. Let's do it. Because I do like Starbucks. I do. I'm just not 100% sure I like it at this current price. Okay? I would have to, because I don't know if is Starbucks a dividend king or a dividend aristocrat or one of the, I know it's not a dividend king, that much I do know. But you know what? We got time. Let's do this. Let's check the profitability of Starbucks and see how many years they've consistently increased their profits. Just for the fun of it. SBUX. So for those of you who don't know yet, this here is Yahoo Finance. If you're going to be investing your own money, or at least want to know what's going on with your own money, clickbait, I hate that. We want to look at historical performance. Wait a minute. Let's see something here. Profit margin, 5.1. Operating margin, 13. Return on assets, 8. Revenue per share, 33. That's like a third of, okay. Quarterly revenue growth, it's down 1%. Quarterly earnings, year over year, 87. Ooh, that's good, 87%. Total cash, 3.6 billion. So this is not the good part. So you think that's good? 3.6 billion. You think that's good? Wait a minute. Look at the debt. Debt, 22 billion. They get 3 billion in cash, but they get 22 billion in debt. This is not good. I'm going to say no to this one. I was right the first time when I wanted to say no. The book value, negative 6.73. So do you know what that means? No, they're making money. Great. The shares are going up. Wonderful. But the book value means, what is the company actually worth? Okay, negative $6.73 per share. So I'm going to say no to that one. Don't get me wrong. I do like it, but I wouldn't buy it. Not now. Not at the current price. All right, dividends only. Let's see all the dividends. All right, let's see. Let's go. How far? What? Only 2010? All right, 2010. That's 16 years. All right, so 16 years of dividends. Let's take a look. 5, 6.5, 8.5, 10.5, 13, 16, 20, 25, 30, 36, 41, 45, 49, 53, 57, 61, 62. Oh, crap. And they keep increasing for the last 16 years. Damn it. So the dividends are increasing, which means the profits are increasing. And they're, okay, you know what? I said no, so I'm not going to second guess myself. Sorry. Okay, back to where we were. Next. It's simple enough, right? Next. Jay Humble, how you doing today? GG, what's going on? GG wants to take a look at Intel, INTC. Let's try this one more time. INTC. Okay. Intel is actually dropping at the moment, so maybe, maybe not. I didn't get out of that one. Okay. All right, so we have the high of the year, the low of the year. Where was it a year ago? Where is it now? Look at the motion. Up, down, up, down. What's going on right here? It looks like she's actually stopped and getting ready to turn around. Last 30 days. Damn it. Hate doing that, but I do it once in a while. Last 30 days. Come on, Intel. There it is, right there. 24. All right. The top, the bottom. Where was it? Where is it? Down, up, down. So you got one up day right there today. So I'll put Starbucks for next week. Next week, Starbucks. Next week. Sorry. Jim, can you please look at VST? Chuck Jensen, how you doing, brother? Are dividends guaranteed? Cesario, I would love to say dividends are guaranteed, but there's only 4 guarantees in life, and dividends is not one of them. Sorry. All right. Shreetbat. Okay. Okay. Oh, UVV. Ooh, I like UVV. It's a dividend contender. Ooh, okay. So Starbucks is a dividend contender. All right, that works. How about UVV? It's a dividend king. All right, well, let's check that one out. UVV. Oh, no. Who came up with that one? All right, Shreebats. Shreebats. September, October, November, February. Those are months of the year, which means it's going to be a no. Because rule number 4 is weekly options only. Now, you may not be familiar with the rules. Let me give you a brief example. That way you have a better understanding of who I am, where I'm coming from, and how did I come up with this strategy. In 2008, my 9-year-old daughter said to me one day, said, "Daddy, what are you doing?" And then she said something that blew my mind, even to this day. At 9 years old, she said, "Daddy, what are you doing? Can you teach me?" Now, I didn't think anything, earth-moving was, when she asked that question. She just, hang out with my little girl and say, "All right, let's play, banker. Let's make some money." So I had to come up with a strategy specifically for a 9-year-old little girl. Now, she wasn't a Mensa student. She wasn't an honor roll student. She's just a regular, average, everyday girl next door. That's it. She's just regular, average girl. Okay, nothing special other than the fact she's my daughter. And we know how that is. So here's the thing. To teach a 9-year-old when most adults don't understand it, it had to be simple. It had to be safe. The profits had to be predictable and consistent. And then most importantly, no way for her to lose. Because we all know if a 9-year-old starts losing money, she's going to start crying. And what happens? Daddy feels like crap because his little girl is crying. But you know what's worse than that? Mama gets involved and Daddy's sleeping on the couch. Needless to say, I did spend many days on the couch, but you know how that is. It is what it is. Young couples, that's what happens. But not the point. The point is simple, safe, predictable, consistent, no way for her to lose. That's the 5 criteria I had to overcome. So in order to overcome that, I came up with 5 very, very simple rules. You can write them down, but once I tell you them, you'll think to yourself, that is so simple. Why didn't I think of that? You ready? Here's the 5 rules. Rule number 1, never ever buy anything you do not want to hold on to long term. That's pretty simple, right? If you don't understand the company, if you don't understand what they do, if you don't know anything about the company, do not buy it. That's it. And if you don't want to hold it for the rest of your life, don't buy it. Rule number 2, this is a big one. Never, ever, ever sell at a loss. And if you're thinking of, let me just get rid of this little loss. No, never sell at a loss because that's negating rule number 1. Okay? Remember that rule number 1, the customer's always right. Rule number 2, if you think the customer's wrong, go back to rule number 1. Same thing. Rule 1, never buy anything you don't want to hold on to. Rule 2, never sell at a loss. It defeats the purpose of the game. And it is a game. Don't let anyone tell you that it isn't. So just like Monopoly, 4 green houses, 1 red hotel, round and round and round you go. Don't get sent to jail, that kind of stuff. Collect your $200, that kind of crap. Rule 3. This one boggles my mind because you really. Rule 3. Make sure the company's consistently profitable. That's why I like only dividend stocks that consistently increase their profits. Rule 4. Weekly options only. Rule 5. Make sure all the numbers work. Basically, what am I buying it for? What am I selling? What am I collecting? And is that more than 1%? But is it the right time to buy? Is the chart telling me, hey, it's the right time to buy? It's bouncing off the bottom and it's going up. Well, we have all that room to go to get back to normal. So yeah, it's the right time to buy. But is it going to be profitable for me to buy? Because a lot of stocks that, hey, they're great timing, but the profits aren't there. Anyway, let's keep on going. Okay, we just did Intel. Thank you there, Gigi. Steve-O! When it drops, you buy it back? Yes, Steve-O, I've heard that one all the time, too. Chris, is BCAT worth holding? B-C-A-T. B-A-C-A-T-I-O-N. What the hell are you thinking? Okay, B-C-A-T. BCAT. It has no options, dude, so it's one of those stocks that I just don't look at, so I really can't give you an answer for it. Sorry, Chris. Infinitely powered. The VIX is something you should check in the morning or overnight just to see how the markets are. Okay, thank you. You scalp the VIX. You can make money off of it. I have to buy like 1,000 shares to make $100. On the VIX? Really? VIX. All right, so here's the interesting thing about the VIX. Here we are right here. 1521. So let's say, hypothetically speaking, I buy it at 1521. I can sell the 15s, pick up 91 cents. 91 cents on a 15. Once you subtract the 21 off that, I walk away with 70. 70 on a $15 stock. That's at least 5% for 1 week. Let's try one, just for the fun of it. You ready? VIX. We got time to kill. The VIX, covered call. They can't do a covered call on the VIX. Hell no then. What the hell would I want to do it for? Nope, if I can't do a covered call on it, no thank you. Next. All right. Taquino. If I sell a put and the cost has gone up, can I buy the contract to buy it at the strike price? Taquino, you're going to have to explain that to me one more time. I'm interested in what you're going to think ULTA would be within their earnings as well. Okay, definitely not something I'm looking at. ULTA is not on my list. Taquino, you like Tesla cars? Okay, I'm buying 1,000 shares TSLL. Funny says that. Okay. I like TSLL also. Take-Two has a huge leak in the GTA game. Okay. Steve, we already did Berkshire Hathaway. That's a hell no. He's definitely no volume. I have no idea what that means. Mervman, AT&T, you say. AT&T. Here we go. Ooh, no. Look at this. It was 20. Now it's 25. That's a 25% increase. Yeah, no thank you. I'm not chasing that. I appreciate you doing this one. I was just curious about it because I've been watching it. Okay, thank you. Aloha, ELF, ELF. ELF. All right, ELF. No, that didn't work either. Nope. That looks almost the exact as AT&T. 50 to 106. Just to let you know, ELF 50 to 106, that's 102%, something like that. Crazy. Uh-oh, Taquino wants to take a look at A-E-O. You are the vowels. Ooh, cool. Look at this. What's Sydney Sweeney up to this day? Here's the top, the bottom. Where was it? Where is it? Look, it's up, down, up, down, up. 1759 to 1750s. Hell yeah, let's do this one. Number 5. There we go. Last 30 days. How can you argue with that? The top, the bottom, where was it? Where is it? Up, down, up. 1750 to 1750s, 56. That's more than 2%. Yes, if you don't mind. All right. Covered call. There we go. There we go. Let's do this. The 1750. There it is. Confirm and send. Bring it down here. Let's take a snippety snip snip. Save it. New. And right there to right there. Save it. Right there. Okay. Shall we? 8/26/2026. Number 5. There we go. All right. That's it. All right. So this is pre-recorded. Cesario, really? No, it's all right. I'm going to do this to him. There we go. Let's do this. And I can't reply to him. All right. No, Cesario, this is not pre-recorded. Oh, wait a second. Hold on. Hold on. Just hold on a minute. All right, so Cesario, and for all of those who think this is recorded, hold on. It is 9:36 p.m. Eastern Standard Time on August 26th, 2026. So if you're listening to it now on August 26th at 9:36 p.m. Eastern Standard Time, it is live. If you are not listening to it at 9:36 p.m. August 26th, then it is not live. It is recorded. Okay? Did I help you out there a little bit? Enron, EC, really? Are you betting it will go up? All right, Franco, you got to tell me which one we're talking about. Uh-oh, I got a lot to go over here. Holy cow. And we're at 8:30. That means phone call time. VSD, rounding error. Yep, 3.8. Cesario, You like it, but it's not guaranteed, right? No, nothing's guaranteed. There's 4 guarantees in life, and that's not one of them. Gang, what about EPD? Sit tight. Sit tight. Uh-oh. Holy cow. But it's a monthly option prices. Yes, I don't do monthlies at all. Monthlies just don't work the same as weeklies. You got 30 days, 30, to think of. And if you miss it, you got to hold it for another 30 days. The numbers, I've never done a monthly option where everything worked in my favor. So I just don't do them. It's just not worth the effort. We did AEO, that's that. All right, wait, let me finish this up first, okay? Let's get this out of here. Bring this back up to there. Let's get the calculator. Find out what the rate of return for AEO is. Okay, AEO, for the 1750, 56 the profit, 1700 is the investment. What is the rate of return for 1 week? That's my concern. All right, 56 is the profit for one contract. $1,694 brings me to 3.3% for 1 week. And I'm just looking for 1%, but I'll take 3.3. And I do like AEO. That's it, number 5, and then we're going to do just questions and answers. We're going to open up the phone line so you can call for those who want to call and chitty chat. All right, let's do this. A, E, O. Come on. Oh, yeah, I was waiting for it to get bigger. I figured I got to do it. I forgot that part. All right. 1 covered call. AEO, American Eagle Outfitters. 4 September 26. That's next Friday. The 1750 call option, we're currently at what? 1770. That's the current price. 1770, and then I'm going to sell it for 1750, less than what I paid for it, and still walk away with 3.3. That's crazy. Crazy for feeling so blue. Crazy. Damn it, come on. There we go. $3.3. That's it. That's our 5 for the day. Now let's answer some questions. Wait a minute. We're going to open up the phone line. Open up the phone line. Now, who wants to call in? Are you ready? 7, 2, 7, 5, 4, 3, 9, 4, 1, 8. Phone line is open. Anybody who wants to call. Now, questions. Who's got one? All right, let's find out where we are. All right, let's do this. Okay, Duncan, nice to see you. B-Shred, thanks for coming back. Hey. Jay Gardner, ENPH. Ooh, okay. End phase. What do you think? What do you think, Mr. Gardner? What's going on right there? There's the top, the bottom. Where was it? Where is it? Look at the motion. I gotta undo that. Here we go. Unknown caller, Brentwood, New Jersey. Come on down. You're the next contestant on Let's Make You Squeal. How you doing? I am awesome. Thank you. How can I help you out tonight?
Well, I just was wondering if a covered call is actually covering.
What is it covering? Are you asking?
So, if I invest something that is a covered call, what does it mean that it's a covered call?
Oh, that means, oh, if you've seen The Godfather, don't worry about it. You're covered. Same thing. All right, so covered means that you're basically safe. So a covered call is when you buy a certain amount of shares in increments of 100. So 100 shares, one contract, 500 shares, 5 contracts. Okay, so when you buy it and then you want to turn around and sell it for the same price you paid for it, it's basically covered because you're selling something that you have an asset to back it up. Now, you could do what's called an uncovered call or a naked call, where you sell an option, but you don't own the stocks, and that would make you uncovered, which is extremely risky. So the covered call is extremely safe. It is so safe that the federal government allows you to do it in your IRA. Now, IRAs are very particular. There's certain things you cannot do in your IRA. Now, you can buy some rental real estate. You can do covered calls. You can buy and sell stocks, but you cannot buy and sell options. But you can do covered calls in your IRA because the federal government finds it to be very safe. That makes sense?
It does. So if I have, so I can invest money that's in my IRA on a covered call?
Only if it is a self-directed IRA. So do you direct your IRA or does someone else direct it for you?
I don't know what that means.
Well, do you decide where the money goes in your IRA?
I do not.
Then someone else is in charge of your money. Guess what? You
Okay.
know what that means? You're at the mercy of somebody else. Okay, so you have two choices. Take control of your own money. Be responsible for your decisions. Or give up accountability and just take what they give you.
Okay.
That doesn't sound too good, does it?
No. It's a little scary.
Well, it kind of is if you think about it. But here's the thing. Who do you think has more interest in your money than you?
Only me.
Well, maybe your ex-wife or your ex-wife's lawyer. That was terrible. Sorry. But
That's okay.
what I'm trying to say is nobody has more interest in your money than you do. You're trading your time for money with the hopes that what that money does in the future to give you a wonderful retirement. I mean, that's what you're looking for, right?
Yes.
Okay, how old are you right now?
53.
53. 53 or 63?
50.
55. Okay. So what were you thinking? 62, 65, 70, 73? How late do you want to work?
62.
62. Okay. Off the top of your head. Now, I do have to admit 95% of people don't know the answer to this question. Okay. Do you know how much money you need in your retirement account to live comfortably?
Yes, I do.
How much is that?
2.5.
2.5. Okay. Now, 2.5, somebody else doing the money for you, they're going to give you what? 4%? 4% drop.
I'm making about 15%.
Yeah, I get that part. What I'm saying is the draw. When you retire, your money manager, your account manager, whatever, they give you what's called a draw. And they usually start around 4%. So
I didn't know that.
So 2.5 million, 4% would give you about 90,000 a year. That sound about right?
Yes.
Okay. So you need 2.5 million. So at 1% per week, that's 50% a year, I can get the exact same returns on $200,000. Wait a minute. 380,000. So here's another question for you. It's totally stupid. Do you think it's easier to come up with 2.5 million or 300,000?
Yeah, that's a stupid question.
It is. So at 300,000, that's $3,000 a week. $3,000 a week is $12,000 a month. $12,000 a month is $108,000 a year. Is that right? No, $144,000 a year.
But that would do me just fine.
So then why do you need 2.5 million? See what I mean?
Yes.
So you giving your money to someone else, You're subjected to what their rules are and what they think you can live comfortably on. But by you doing it yourself and learning a simple, easy strategy created for a 9-year-old, never ever buy something you do not want to hold on to. So I got a couple simple questions for you. Do you think Coca-Cola is going to stop making Coca-Cola next year?
Well, the thing that I had.
Wait a minute. Just they're simple, easy questions.
Yeah.
Coca-Cola.
Yeah, if you want me to answer them, I'll just say yes.
So Coca-Cola's been making Coca-Cola for 140 years. They're probably going to keep doing it. Bank of America, Wells Fargo, been in business, the financial business, Capital One Finance for over 100 years. Harley Davidson, Ford, General Motors, AT&T, hundreds and hundreds of companies have been doing the exact same thing for over 100 years. Do you think they're safe?
Yes.
So why not do it yourself? Take your account, set it up in separate little piles, here for General Motors, here for Ford, here for AT&T, Consolidated, Edison, Home Depot, Lowe's, all the good quality companies. Even if you get 0.5% per week, that is still 26% by the end of the year.
I know it sounds really good.
It does.
But the thing that bothers me
Okay.
is that even if you're going on your 1% per week, you can still lose that 1%.
Explain to me how.
Because it's not guaranteed.
Wait a minute. Yeah, but explain to me how I could lose.
Well, if I invested in a 1% or 1.5%
Mm-hmm.
for that week, that looks like it's good for that week, I can still lose it that week.
Okay, but you
And
still...
then after,
Yeah, I hear what you're saying. I get this question all the time. But what I don't get is you explaining to me how would I lose?
well, because the stockholders could say that we don't want to pay that 1% this week because we did poorly, so we're not going to pay out that dividend.
Okay.
That dividend is not guaranteed.
Okay, so let me ask you a question. Okay? It's not an easy question. It's a little complicated. If you are CEO of Coca-Cola and you are having a little bit of an issue, and that the decision is you could decrease or not pay the dividend, and then you would get kicked off the Dividend Kings list. Do you understand the ramifications of that?
No, I don't.
A company that has increased its profits for almost 60 years, that's 6 decades. Do you really think the CEO is going to decrease or not pay the dividend? Because once you're not a dividend king, you have to start from ground zero again. And there's only about 67 companies that have consistently increased for over 5 decades. And nobody wants to be that guy.
Well, I would like to know how many weeks per year they didn't pay out their dividends.
Well, wait a minute. You're mistaking something. These are not weekly dividends. These are weekly options. There's 3 things to keep in mind. Stocks, options, dividends. 3 totally separate things. Now, the stocks go up and down, up and down, up and down. The options do the exact same thing. The dividends for the Dividend Kings have to increase every single year for them to stay where they are. And every single company is trying to do the exact same thing. Make more money this year than they did last year. So if Coca-Cola has been increasing their profits for over 6 decades, do you really think that they're going to change this year or next year?
No, but I'm not just talking about Coca-Cola.
Wait a minute. Coca-Cola is just one of them. Home Depot, Lowe's, Bank of America, Wells Fargo, Kimberly-Clark, Procter & Gamble, Colgate-Palmolive. I can keep going on and on and on of companies that are over 100. Consolidated Edison, 200 years old, and they still consistently make money every single year.
Okay, I hear what you're saying.
Okay. So if you only buy companies that are good, solid, quality companies that do the same thing year after year after year after year, I mean, Coca-Cola is the number one soft drink in the world, not just the United States, in the world. It's recognized worldwide. I wouldn't be surprised if the Martians are up there in Mars sucking down some Coca-Cola also. Is what it is.
So then why wouldn't everybody just do that?
Because of what you said at the beginning of our conversation. It sounds complicated. I don't think I can do it. I don't understand it, and I could lose. Everybody says the same thing. So I'm not trying to insult you or anything, but you're saying the exact same thing everybody else says. And then I asked them the same question. Coca-Cola's been making Coca-Cola since before I was born. Pepsi, the same thing. They're going to continue to make it long after I'm gone. So I don't think owning Coca-Cola is going to be a bad thing. And the losing part is what a lot of people don't understand. They think, well, I can lose money if the stock goes down. No, the stock can go down to 2 cents. If you still own it, you still collect those dividends and you still have the opportunity to write a covered call, regardless of your purchase price, regardless of where it is. You only lose. I need you to understand this and hear it. You only lose when you consciously decide to sell for less than you paid for it. Do you understand that?
Yeah, it's basically saying holding on to the stock until it, even if you lost it, you're still paying into it until it regains its worth.
Kinda. The wording was a little bit incorrect, but I think you're on the right page. If I bought Coca-Cola, let's pull it up for a second. KO. Okay, Coca-Cola's at $90 right now. I wouldn't buy it at $90, but a year ago we're at 66. Went up, pull back, up, pull back, up, pull back. Now, I'm not going to hold it through all this crap. I'm going to buy it, sell it, buy it, sell it, buy it, sell it to earn that weekly cash flow. But if I only do those companies that are consistently profitable year after year after year, I can go from Coca-Cola this week to Pepsi next week, Ford the week after, Hewlett-Packard the week after, IBM after that. Switch who is doing what. Because every company is doing the exact same thing, or at least trying to do the exact same thing. Make more money this year than they did last year. Would you agree with that?
Yeah.
So they're all trying to do the same thing, but it's kind of like a merry-go-round. The horses are going round and round. They're going up, they're going down. They're going up and they're going down, but they're not really going anywhere. They go up, they go down. So when it's going up, you jump on. When it's at the top, you jump off and you jump onto the next one. That make sense?
Yes, it does.
Okay, now, are you trading yourself or someone else doing it for you?
Someone else is doing it for me.
Okay. Do you think it might be a good idea to maybe think about it?
Yes, and that's why I watch Dividend Trader.
Okay, so here's another question for you. Now, how much do you have now, roughly? Doesn't have to be exact, but roughly.
Around the 2 to 3.
Around 2 to 3 million? Oh,
Not that much.
2 or 300,000?
Yeah.
Okay, so let's say 200,000. That would be about $2,000 a week, which would be $100,000 a year. That sound about right?
About double.
Okay. Now, do you own the house or are you still paying on it?
About another 9 years.
Okay. You going to pay it off or are you going to mortgage it to the hilt?
I'm going to pay for another 9 years.
Yeah, but are you going to pay it off?
Oh, yeah.
Why?
Because I don't want to make the mortgage payment anymore.
Okay. So let me ask you this question. Let's say hypothetically it's paid off. Do you still have to pay taxes, insurance, and maintenance?
Yeah.
Then it's not paid off, is it?
No, but it's a much less fee.
Okay, so let's look at it this way. Number one, how about, just for the fun of it, we go to McDonald's or we go to Burger King or Starbucks or whatever, and you try to pay for that with your equity. What do you think is going to happen there?
I don't know. I'm so sorry. I'm not understanding.
Okay, equity is the amount your house is worth. Once it's paid off, you have 100% equity in your home. Let's say the house is worth $500,000. You have $500,000 you cannot touch. You cannot spend. You can't do jack shit with it. So why are you putting money into an account that you can't access? You didn't think of that, did you? Okay, so if you mortgage it to the hilt, what is the interest rate right about now? 6, 8%, something like that? 4. Okay, 4%. If you're making 50% per year and the money is costing you 4% per year, you're walking away with 46% per year pure profit on money that's not even yours. See, a lot of people don't understand finance. Also, 100% of the interest paid on a primary home mortgage is tax write-off, which means you're making 46% and you get to still deduct all those numbers off of your account. And the house is still going to increase in value. So you're separating the house from the savings account. The only way you're going to get that money out of the house is to sell the house. Now you have to buy another house. Why not mortgage it to the hilt, put that money in a separate account strictly to pay off the loan? So as you make your 1% or 0.5% every single week, you pay the mortgage. And every 5 years, you refinance if it goes up. So money is a funny thing. Okay, we're the only species on this planet that's got to pay to live here. So to the degree in which you want to live comfortably, you got to pay. And you can't touch that money that's in the house that's paid off. So what good is it?
Can I ask you a question?
Go ahead, shoot.
Are you his son?
Whose son?
Dividend guy.
Oh, no. I'm 62 years old. Okay?
Really?
I got
You
kids.
sound just like him.
Sound like who?
The guy I watch on TikTok.
You mean that's not me?
This is you?
Yeah, this is me. I'm the one that came up with the strategy in 2008 when my 9-year-old daughter said, "Daddy, can you teach me?" So trying to figure out how to teach a 9-year-old how to invest, most adults don't even get it. And
Wow, I'm actually talking to you?
yes. That's why, didn't you just see me put the phone number on the line? On the board?
No.
Yeah, that's...
No, I turned off the live and called.
Oh, no, it's me. But it,
Oh my god.
well,
I'm sorry. I didn't realize it was you. It's amazing.
well, it's my show. Now, don't get me wrong. I love my children. I do, but they don't know what I know. Okay, but they're trying to learn. Now, me and the wife made a mistake of giving them basically everything while they were younger, so they didn't understand how money worked. So once they got to a certain point and they moved out on their own, I stopped giving them money. So now they got to pay their own bills. Now they have to put the 40, 50 hours a week working for someone else. And now my oldest son is 37, my youngest son is 32, my daughter is 27, and my other daughter is 28. So now they're looking at me and say, "Dad, this really sucks. I don't want to work 40 hours a week for the rest of my life. Can you teach me what you're doing?" So it's a big difference, and it's a big realization for them to say, you know what? This 40-hour week shit sucks.
Yeah.
No. So now I always encourage them, keep working, put your time in, put your 30, 40 years in, contribute to society, but take your money and invest it in a way that when you get to a certain point, money is no longer an issue. I mean, wouldn't it be nice if you get up in the morning and say, "I don't feel like working today"? Wouldn't that be nice?
It would be really nice.
I do it every day, and I'm only 62. But it took me 5 decades to get here, though. And if I knew then what I know now, I would have got here a lot sooner.
How long have you invested?
For 30 years.
30 years? So 30 years ago you knew how to invest?
Oh, hell no. 30 years, I made mistake after mistake after mistake. It wasn't until 2008 when my 9-year-old daughter asked me, can you teach me? So trying to figure out how to teach a 9-year-old, I had to dig really deep and look at all the different things that are out there. So what is consistent? Consistency comes when companies or someone says, I got a great idea. I want to start a company. So where are they going to get the money? Okay, back in, I think it was in the late 1500s, where the Dutch East India Shipping Company started. We want to create the biggest company in the world. So they went door to door. Have I got a deal for you? You invest in my company, give me your money, and I promise to share the profits with you. The first Dividend stock was sold in 1602. So knowing that, then taking a look at the EX dividend date, which is the last day the stock trades before the dividend is paid, the stocks have a tendency to go up. So by knowing when the stock is going to move based on the dividend, well, now I just got to come up with a trading strategy that's simple and easy for a 9-year-old to understand. Buy the stock for $100, sell it for $100, and make 1 or 2% every single week. So I don't really care if the stock goes up. I just want to make sure that it either stays the same or goes up. Because they go 3 ways, up, down, or sideways. So 2 out of 3 ain't bad. That's what Meatloaf said back in the 80s. So if it goes up, great, I'm good. If it stays the exact same, great, I'm good. If it goes down, I better make sure rule number 1 was good. Never buy something you don't want to hold on to. So if I buy Coca-Cola, I'm okay with owning Coca-Cola for the rest of my life. Because I can do a weekly covered call on Coca-Cola every single week. Some weeks I'll make 1%. Some weeks I'll make 3%. Some weeks I'll make a quarter. Some weeks I'll make a half. But if it averages out to 1% every single week, that's over 50% a year. And I don't need 2.4 million. I only need a couple 100,000.
How often do dividends not pay out?
To be 100% honest with you, I can't even remember when a company came out and said, you know what, we suck, we're not going to pay our dividends this year. I can't even.
No, I mean for the week.
No. Wait, you're getting them mixed up again. Coca-Cola pays the dividend 4 times a year, once every quarter. There's 3.
No, but you only buy weeklies.
No, I don't buy, I sell. There's a huge difference between buying and selling. Okay, I don't buy options because options expire worthless 80% of the time. I want to sell them and I want to be on the 80% side. Now, granted, buying options.
Can you explain that to me? Because I thought that you were just buying for 1 week. Like, so we're buying today, if it was today, and we're selling on September 4th.
Okay, wait a minute. Hold on. Can you? You're on your phone. Were you watching on your phone?
I thought I hung up.
No. What I'm trying to say is, if I put it up on the board so that you can see it.
You're live right now with me?
Yeah, I'm still live. We still have a couple of thousand people here watching you.
No, come on. All right, hold on. Oh, God,
Hold on. Nobody knows your name. Nobody knows your phone number. Only me. Okay? I'm not going to give your phone number out. I'm not going to give any information about you out. You're just an anonymous person there down the line asking questions. And the questions you're asking are similar to what a lot of other people are thinking. Okay? All right. You missed my whole speech, didn't you? I said, don't worry about it. Nobody knows who you are. All right? Now, are you watching the screen? Okay, now watch this. I'm not going to do Coca-Cola because that's at the high, and I don't buy at the high. So let's look at a good one that we found earlier today. What did we find? Hold on, let me see what we found. AEO. Let's do AEO. You know who AEO is? American Eagle Outfitters. Do you know who they are? Hello?
Yes, I do. There's a delay, so I'm trying not to talk.
Oh, okay. All right, I'm going to pull up American Eagle Outfitters. That's not what I want. All right, here's where we are right here. Okay, right at this moment, American Eagle Outfitters is at $17.59. All right, so if I buy it tomorrow at $17.59, number one, I have to actually like the company enough to put my own money into. Now, I'm okay with American Eagle Outfitters, and I don't mind owning it. All right, so if I buy it $17.59, I can sell it 2 seconds after I buy it. Do you understand that?
Yes.
Okay, so I buy it $17.59. I'm going to use a covered call and sell it for $17.50, which is less than I just paid for it. So a covered call, American Eagle Outfitters. I'm going to buy it at $17.59. I'm going to sell it at $17.50. Now, the stock has to stay above $17.50 by next Friday. That's the expiration date for September. So for that privilege, someone is going to pay me $56 for each contract. So each contract is 100 shares. 100 shares of American Eagle Outfitters is going to cost me $1,694 per contract. So if I buy 100 shares, $1,700, I sell it for the exact same price I paid for it, I'm going to collect $56 per contract. The stock can go 3 different ways. If it goes up, great, they'll take it away from me. If it stays exactly where it is, great, they'll take it away from me. If it goes down below $17.50, I got to hold on to it. Now I'm okay holding on to it. And next week, let's get out of this, get out of that, get out of that, and we go to 11 September. I can sell the $17.50 again on September 11th. And then I can do a covered call every single week until somebody buys it from me at the same price I paid for it, $17.50. So if the stock is going up, what are the odds and probabilities of somebody taking it away from me at $17.50? I don't care because I get the premium every single week until someone takes it away. And I'm buying it and selling it at the exact same price, but I'm getting more than 1% every single week on companies that I like and companies that are consistently profitable year after year after year. Does that make sense?
It does. It totally does. Yep. I just, if it didn't go up, how long do you have to hold it before you can actually make the profit? Like, that is the strategy, isn't it?
Part of it. Okay, the dividends, this is the part where the dividends come into play. Are they increasing their profits year after year after year? If I'm looking at American Eagle Outfitters, how many years have they consistently been profitable year after year after year? Well, the Dividend Kings, it's 5 decades. So if a company's been in business for 100 years and they're successfully profitable every single year, I don't really find risk in that. And I could buy it at 17, it can drop down to $5, and they'd still increase their dividends. That's the key. Consistently increasing, consistently profitable companies. If it's not consistently profitable, I don't want to do it. That makes sense?
100%.
All right. So, you have any other questions?
No, but I will be getting in touch with you personally.
You know, you can go to the website and actually book a call, and we can sit and chat again.
I will.
All right. Well, is there anything else you need to know? Because ask away.
No, thank you so much. I am looking forward to talking to you again.
All right, you got it. Have a great day. Hello. Hello,
Hi, this Mr. Dividend guy.
Mr. Dividend Guy. I've never been that name before. How are you doing today? Okay, hold on a second. There's someone calling me from Chino, California. If you can wait, now let me see if I can send him a message. All right, custom.
Yes, I would love to talk to you when you're listening.
Okay, hold on a second. Call back in a bit. Call back in a bit. All right, so I sent him a message. All right, what do you got for me?
Yeah, so I should just give like a little bit of background about myself before I first getting started. Is that running a 44% annual year strategy is absolutely absurd.
Okay, thank you.
I mean,
Keep going.
Every bank in the world would be doing that. I run a quantitative private equity fund
Okay.
that focuses primarily
Okay, so
on
all right.
public markets.
Okay.
Using everything inside the XLK.
Okay.
To buy these stocks that you're speaking about, these folks need to first come up with. Let's use the SPY for example. I think that's a fair value.
Okay.
You know, something that you said they need a couple $100,000.
That's not what I said.
So
Keep going.
well, you said to make this keep working correctly. You do, right? And at 1%, you really need to get your money back. So you're going to be paying what? $77,000 first to write this contract.
What? No, that's
And
seven.
also-
Wait.
Yes,
Wait.
Wait. You're trying to sell somebody a naked spread and forcing an execution if it goes inside of the money. So here's the thing. These people will be locked. 100% locked. This is a banking institution that you sign these documents. You can't sell naked calls, sir. And if you go inside of the money on those naked calls, those people will be assigned a $77,000 decision.
Okay.
And SPY at 770.
Okay. Can you explain to me exactly where I said that? Because what you're saying, I didn't say. And when I said you could buy 100,
You're running okay, but if you're buying 100, you have to buy an underlying stock first to write that. If not, you're writing that on like you said, a naked position, which is 100% fact. So, and those you're not writing against myself or you. You're writing against the bank.
okay.
There is very limited retail exposure that you're going to be writing these contracts over to somebody that does not hold a Series 7 license that's institutionalized.
Okay. So
So like saying that you're running these things is that like Coke is a great example. You need to be under what's called an average true range, right? That stock needs to be less than that premium per week.
okay.
Right? So like Coke for example, trades at like $1.50 maybe on a weekly basis. Now that stock cannot move against them over that $1.50. If not, they need what's used is called put, which would ultimately bring you into what's called an option collar. And that's the way you can get delta neutral, so you're not losing money. Because something that is event driven or economically sound, you're not able to control those factors. This is why these ETFs don't exist.
Okay. Is it my turn to talk yet? Or you keep going?
No, I just wanted to clear what I have to say. I mean, I appreciate what you're doing.
No. I heard what you said, and a lot of things you did say, I didn't say. Now, when I said you can buy 100 shares of American Eagle Outfitters at $17.59, that's $1,750. Correct? Okay, wait a minute. Don't, wait a minute. No. I let you talk. Let me talk, okay? All right. If I buy American Eagle Outfitters at $17.59, can I sell a covered call at $17.50 for next week and collect, what is it? Right there, 56 cents per share. Now, 56 cents per share on a $17.50 option is about a 3% return for 1 week. Is that correct or is that incorrect? Okay, wait a minute. No. Just it's a wait a minute. No. Dude, hey, I've been doing this for years, and every once in a while I get someone just like you, but you never answer the questions directly. If I buy it at 17, wait a minute. If I buy it at 17.59 and I sell the option at 17.50, pick up 56 cents, that's 3% for 1 week. If the stock is above 17.50, is someone going to take it away from me?
That's going to depend on the firm that you're betting against.
No. If it's above 17.50, wait a minute, let me finish. Okay? If it is above 17.50, if someone buys it from me at 17.50, they will more than likely take the shares away from me. I will get my money back. If they don't take it away from me, the market maker will take it away from me at 7.59 if I sell the 7.50s. It's strictly a mathematical equation. If I buy it for 17.59 and I sell it for 17.50, someone's going to take it away from me. Do I care who takes it away? No, I don't. I want to buy it. I want to sell it. Someone's going to pay me, and at the end of the week, I get my money back.
The maker has to cover till 18.25 for us to be profitable.
That's not my issue.
If I'm going to buy it out, well, yes, it is, because you're lying to people.
No, I'm not. Dude, I've been doing this for 30 years.
We're not going to take it as a firm. We're not going to take it unless it's over $18. And we're going to dump that option before it even comes due. They're theta decay.
I know what theta decay is. Theta decay is every day that goes by, the option value gets less and less and less. Implied volatility change, the option either goes up or down depending on implied volatility. I know all this shit. I'm trying to explain it for a 9-year-old. For a 9-year-old, if it is going up, it is going up. No, okay. Now see, I appreciate what you're doing. I really do. You're doing what you do for the reasons that you do it. Fine. But if I'm doing it every single day or every single week, and it's working for me every single week, I need you to explain to me why you think it's not working. If I buy it at 17.59, I sell the 17.50s. On Friday, if it's above 17.50, someone, I don't care who it is, someone's going to take it away from me. Once in 30 years has somebody not taken away from me when it was in the money on Friday. Once in 30 years.
I haven't been doing this as long as you, but let me just ask you this. Let me be really blunt. Like, I'm kind of a New Yorker. If you're so good at this, why don't you run an ETF or institution?
Because I don't like the government and I don't like the SEC looking over my shoulder. I hate FINRA, and I hate answering stupid-ass questions from people that don't need to know what I'm doing. I am perfectly okay getting 1%.
They don't know what you're doing, right? Because you're not doing it correctly. Because the S&P can move 12 on the ETF. Can move 12 to 20 points.
Yeah.
The handles, whatever you want to call it, in a day. And you're only going to collect $5, maybe $7 on your weeklies.
And is that good or bad?
Well, you're still going to lose money.
No.
You're not going to aggregate to that 40-odd% that you're talking about.
I have 2 losses for this year. We're in August, close to the end of August. I trade every single week, at least 200 or 300 trades a week. I've lost 2 trades this year. Last year, I lost 2 trades. The year before that, I lost 4 trades. Explain to me how I'm wrong. I made 68% last year. The year before, I made 45%. The year before that was another 60 or 70%. Explain to me where I'm doing wrong if it is working every single week.
So if you're making, let's say you got $1 million account, which I think is fair after investing over 30 years and trying to teach it to people. I think that's a very fair valuation.
Okay, thank you.
Of
Okay.
That means that you're yielding $680,000 a year.
And
And then you're multiplying it over a 30-year period. You'd be a billionaire.
yeah, and
That's where I'm trying to get at right now. It's like something's not adding up.
okay, you're under the assumption.
I respect. I listened to you, and I wanted to believe like everything. Like I'm like maybe I'm missing something inside of this market.
Okay,
Like,
so
maybe,
I'm gonna.
maybe there's something I'm missing.
Yeah,
But
I'm
there's
gonna
no
blow.
way that this math even makes sense.
I'm gonna blow this up, and you tell me if it's wrong. Okay, I'm gonna blow it up nice and big so everyone can see it, and then you can explain why it's wrong.
I'm not looking at the live, but I will.
Oops. Okay, give it a second. It's gonna pop up.
Hold on. I mean, here's the thing. It's like I respect a lot of people, but like there's like I've been doing this for a long time too, and there's a lot of people that screwed a lot of people over, and they don't understand the true risks and parameters inside of this.
Okay, so I got another simple question. Have you heard me ask anyone for any money or anyone to buy anything from me this evening?
I can't get to your live, so I'm just gonna take you for your word or whatever you want to say.
All right.
That's pretty sure.
All right. Okay. So
But
here's
no,
a,
I haven't heard that, but you got. But I think there's a lot of people out there that are being miseducated that thinking that they're going to put up $100,000 a year and you're going to get $60,000 back when they have to own this stuff.
that's not what I said.
You're talking.
Okay, don't put words in my mouth. That's not what I said. Okay,
You're
so
selling naked calls.
no, never, ever have you ever heard me say anything about selling naked calls. Never, ever. I only do covered calls. Once in a while, I'll do a cash secured put or a poor man's covered call or a debit spread. Never, ever did I say anything about naked selling. Okay, so the question
Well,
is,
then where are they going to come up with the money?
hold on. If I do this trade here, buy one covered call, AEO, with the expiration for September 26 at the $18 call strike. The maximum profit is $89. The investment, including commissions and fees, is $1,711.66. Cost of the trade, including commissions and fees. To find out the rate of return, you take the calculator, you take the profit. Where the hell's my calculator? All right. You take the profit, $89. You divide it by the investment, including the commissions and fees, $1,711. That comes up to a total of 5.2% return for 1 week. Is that right or is that wrong?
Oh, I'm looking at the $18 calls on Thinkorswim as you are, and they're 50 cents.
And
You said they're 81. That's 31.
hold on. Let me get back to that. Get rid of this. Get rid of that. Go back to covered calls. Right there, single. The 18, wait a minute. I'm looking at it right now. It's 45. Wait a second. I'm looking at it now. 45 by 50. Okay. The covered call, it's an $89 profit. The investment is $1,711 for 100 shares. So, 89.
How do you get the $89 if you're selling one covered call at 45 cents?
Yeah, I hear you. What is the maximum profit? $89.
That is your profit.
Yeah.
45 cents.
No, whatever.
And then you have to hope that it doesn't go over that, yes.
Okay,
So you have to
and?
get into that call. So that's going to 1845 for that to be exercised profitably.
No, because the market maker will take it.
Sell it in the middle of the week. They're going to sell it on a Wednesday. You know this.
I'm well aware of
They
it.
do the trading, right, so they're going to sell out. You're not going to collect the premium.
Why not? I get the premium the very first day. If I buy the stock tomorrow morning.
Dude, you have to honor that contract until Friday.
Hold
You
on.
have to honor that. If I want to, come on, if I sell this 18 fall at 45 tomorrow morning, let's
Yeah.
say it opens right now. It's 9:30 in the morning, okay?
Uh-huh.
I'm going to sell this, okay?
Uh-huh.
Not going my way.
Okay.
Not going my way, right? Going down, right?
Okay.
Or whatever.
I hear what you're saying. Hold on tight. All right, keep going.
This is not European contracts. These are American contracts.
Yes, I know.
I have the ability to leave, to move out of this position, and any quantitative firm and any discretionary debt that at the levels that you're talking about, returning 40% a year, they're not going to tolerate this type of mathematics. They would bring you in.
Why?
You know what? You're not going to, because guess what? You're not going to miss on $100 million a year. And there's no one inside this chat right now that's going to say that their life's more important for 5 years than a $500 million paycheck.
Okay, so let me ask a question. Yeah, I hear you. Sit tight for a second. So the question I have for you: how do you know what I'm doing with the money that I make on a weekly basis? Okay, wait a minute. You're no, but you're making. Yeah, I get that. You're making the assumption that I'm money hungry and I'm looking to make millions upon millions. I'm not. Okay, I make 1%. Actually, I'm averaging 1.4% a week. 1.4% a week pays all my bills. But that's your assumption. How do you know? And I'm not, all right, I could care less about the money. Is the math correct? If I buy a stock, sell a covered call, somebody buys that from me, the money that I bring in divided by what I put out, is that or is that not the profit and the rate of return in which I collect?
Not always. It's event driven. And I mean, we can disagree. I appreciate you taking my phone call.
Okay, so I got, wait a minute. Don't run away so quick. If I buy Coca, okay, is it safe to say that Coca-Cola is going to continue to make Coca-Cola for the next 10 or 15 years?
Okay, I was listening to this whole entire thing about you saying that for the past 60 years that they have been doing this, and that's absolutely wrong. They have not been profitable for every 60 years. So this stock would be through the absolute roof, and that's all people would invest in.
Okay, I think we have
there has been bouts inside of Coca-Cola that would, I mean, yes, is the chart upwards to the right? If you're a company with the past 50 years inside the S&P 500, absolutely, for sure. But they're not profitable every single year.
Okay,
There are quarterly misses.
I think you and I have a miscommunication. All right, I want to show you something. Are you ready? Okay, 1986.
I can't look.
All right,
I can't find you.
just listen to the numbers then. 1986, the dividend was 1.6. 1987, it was 1.7. 1988, it was 1.8. It went up to 2.1, 2.5, 3, 3.5, 4.25, 4.8, 5.5, 6.2, 7, 7.5, 8, 8.5, 9. Then it jumped to 10, 11, 12 and a half, 14, 15 and a half, 17, 19, 20 and a half, 22, 23 and a half, 25 and a half, 28, 30, 30 and a half. 30. Wait a minute, I'm not done. 33, 35, 37, 39, 40, 41, 42, 44, 46, 48, 51, 53. Every single year, they've increased their dividends. The dividend is a portion of the profits the company gives back to the investors. Am I right or am I wrong? Wait a minute. Am I right? Wait a minute. Am I right or am I wrong? Wait a minute. I'm not asking about the yield. I'm not asking, dude, if you're not going to answer my questions, I'm going to end the call. It's a simple question. Am I right? Am I wrong? Have they or have they not increased their dividends for the almost 60 years? Wait a minute. Hold up. See, don't change my words. My words were specific. They have increased their dividends for over 6 decades. That is consistently increasing the dividends or increasing the profits, however you want to look at it. Stock price goes up and down. I don't care. Oh my God. I don't care about the stock price. Stock prices go ups and down. It is the dividends I'm concerned about. Are they increasing their dividends? Yes or no?
And you gotta own millions of it, dude.
No, I don't. Holy shit knuckles. Dude, I'm not. All right.
You get paid 53 cents a quarter per share.
All right. I hope you guys don't mind. I'm just hanging up on that fucking dude. He just doesn't want to listen. I really don't care about the stock price. I really honestly don't. As long as the company's consistently increasing their profits or their dividends every single year, I'll buy it. If they have weekly options, great. What are the weekly options paying? It's a simple question. If I buy it for $17.60, sell it for $17.50, I get a 56-cent profit for the week per share. 100 shares, that's $56. 200 shares, that's $112. You can do the math. Of 1,000 shares, it's $560 every single week after week after week. Don't get me wrong. He's probably good at what he does, but he just too many freaking questions. This is why adults have a difficult time understanding this, and a 9-year-old got it in 15 minutes. The stock is going up. Great, let's buy it. It goes up. Wonderful. Let's sell and take the profits. Does it do it every week? No. Sometimes it doesn't. But when it does go up, bottom, now she's going up. If I buy it $7.59, I sell it at $17.50, someone's going to pay me 56 cents this week per share. That's what I'm looking at. And people like that on Wall Street, he's a Wall Street person. He doesn't understand it. It's not my problem he don't understand it. Either it works or it doesn't. And it works fine for me. You don't understand it? Perfectly fine. It's 10:30. I'm done. Sorry about you guys. Let me see if I can get some of these questions before I'm done. Thanks for explaining the rules. You're welcome. How does MO look like? It looks great, but I can't tell you yes or no. Chino, California. Well, I do hope you... Hello, and how are you today?
Hey, James.
How are you doing?
Here's Alex.
It's you, Alex. How you doing?
Pretty good. Hey, real quick, I wanted to call you to kind of like give you, I'll make this short. I know you're trying to jump off. But, so I started watching you about a year ago, obviously probably around August last year.
Okay.
And I didn't really jump into, I watched you for about 6 weeks before I really started jumping into this. And I would pop in, I was almost in every single live. And so I started October 10th. I started to essentially take covered calls.
Okay.
And I am glad to say that I'm almost a year in, and I've made so far 57% return on my investment.
Wait a minute. You made 57%?
Yes, correct.
Fuck, awesome. That's awesome, dude. Good for
And
you.
I projected to be at around 63-64% by the end of the year. Not by the end of the year, but by the end of October.
You're doing...
So that would be exactly 1 year.
All right, you're doing much better than me. I'm only at 34% so far this year.
Yeah.
But wait a minute. We're in week number 33. We still have another, 29 weeks left to go? So I'm at 29, 32,
Correct.
whatever.
Well, technically we do, but I started it in October. Let me just check real quick. October 10th of last year.
Okay.
So my year end would technically be October 2nd. And so the whole point that I'm calling is to tell you that, like, just to thank you, because we've talked about this before online, and I've told you, like, this has changed my life.
Yeah.
The fact that I'm able to kind of do this myself and not have to worry about someone else holding my money. I haven't made a lot of money, but I've been, again, like I said, I'm up to 57-58% for my initial investment.
Okay.
And I'm so confident with this that now I want to teach my nephews and
Okay.
get them on board so that they can retire early. The whole
Okay.
goal
Now,
essentially is
okay, so have you seen my new strategy, the Maverick strategy?
I have not.
For those who don't have a lot of money? Allows
I
you
have
to
not.
get in, get out 1 or 2%, whenever it moves. Yeah, when you get a chance, why don't you just join up for a month? We'll chat, and you can see how the Maverick strategy works.
Yeah, maybe I'll do
For your nieces and nephews, it's perfect. My grandson started out with $50.
Yeah, yeah. I mean, overall, like you've been a big help, and I thank you. I know the last call was a bit just probably got you fired up.
Yeah.
I wanted to give you at least one success story for the night before you didn't get
It surprised. Oh, you got that last caller? It surprises the hell out of me. It's like he couldn't answer a simple question. I mean, I understand where he's coming from. He's coming from Wall Street, and they look at things totally differently, because the more complicated they make it, the smarter they think they are. But if a 9-year-old can understand it, buy this, sell that, and my daughter was averaging 5% at 9 years old, 5% per month at 9 years old. And guys like that say, it doesn't work. Okay, fine. You say whatever you want.
Well, it's been working for me. I mean, like I said, you didn't put me up to this or anything like that. I've been watching you for almost a year now.
A year? Holy cow! You need to say hi more often.
Well, I pop in every single night. I know you're really busy. I drop in. I'm the one that dropped in AEO tonight. And,
oh, okay.
So I've been following you. I usually trade a lot of calls. I trade AEO. I traded Mara for a bit. Mara kind of hurted me a bit, but I was able to get out of that hole.
Yeah.
So I've been trading. I don't necessarily trade the safest, but I am looking to see. I'm following essentially your rules.
Yeah.
I probably skip 1 or 2 rules, but at the end of the day, what I mean by skip the rules is like some of the companies that I've invested, like Mara doesn't quite follow your rules.
No, it don't.
But I mean, it's giving me some good returns. And then I'll take that money and I usually drop it either in Kohl's, Mara, Hertz, Chipotle, Nike, Nokia. So I've been just kind of like moving my money around to different stocks and just kind of looking at the charts and trying to make sure that I don't get myself too in trouble,
Yeah,
but usually look at the 30-day highs and then the year high.
Yep.
And I try to see if the momentum is going up or down. That's usually what I do.
Dude, I'm happy it's working for you. Honestly, I am.
Yeah.
But keep in mind, make sure it's a good company, because if it doesn't have dividends and the fundamentals don't work, it might not be a good deal, even though it looks good. I got caught with a couple of them this year, and I shouldn't have done them, but I did anyway. It's nobody's fault but my own. I got that shiny object syndrome. Oh, this looks good. Let me do it. Yeah, I shouldn't have done that.
Yeah.
So,
That
but
happened to me with Mara.
yeah,
Essentially.
yeah. See, okay. So I get it.
Yeah.
But thanks for calling in.
Absolutely, man. We'll see you back. Have a good night.
All right, you have a good night too. All right, so I'm going to see if I have any questions. See if I go. So, Keem, it's not dividend harvesting, but dividend harvesting is one of the oldest strategies it is. They also call it dividend capturing. Same thing. Buy the stock, capture the dividend, jump on out. Yeah, when the stocks pay the dividend, the stocks have a tendency to go down after they pay the dividend. So before the dividend, the stocks have a tendency to go up. So you could jump in before they pay the dividend and jump out before the dividend is paid. Now, it sounds kind of counterproductive, but you don't want to get, I don't want to get into a situation where they pay the dividend and the stock drops. So I'll jump in 2 or 3 weeks before the dividend, and as it goes up, I'll collect that 1 or 2% and then jump out before the dividend. So there's a big difference between dividend harvesting, also known as dividend capturing, and what I do. I jump in before, and then I jump out before the dividend is paid. Because I want to avoid that dividend drop. Holy cow, we get a lot of messages. All right, I'm just going to answer questions. Premiums when the number. Thank you, Justice. John Didier, how you doing? How you doing? All right. That was a good compliment. Thank you, Liv. OMG, I'm going to think about that one too. All right, Kristen, how you doing? John Didier, thank you. All right, let's keep on going. Thank you. Almeida, how you doing? Forex Gold, I don't do Forex, sorry. Simply Vicky, how you doing? Thank you for that. Yep. Please explain this again. All right, A1, you have to show up tomorrow. We'll do it again tomorrow. It's from Schwab. Thank you there, Den. Mr. Phil, I have a lot of patience. Yeah, I have to deal with people like that. I hate that. It's a simple strategy. Why do you want to complicate it? Just let him drop. I agree, but yeah, I don't like doing that. I think it's rude, personally. I mean, I tried to answer all his questions, and he just didn't want to give me he didn't want to give me my time in the spotlight, so to speak. Thank you, Jules. Hey, Jules, how you doing, honey? Ron, how you doing? Great. Lord's operator. Okay. Does this caller have a better strategy? Yeah, I would like to know it too. But, those people have a tendency to say one thing but not actually deliver. Because he wasn't answering my questions, and the question was simple. If I buy it for this, sell it for that, how can that not be correct? Enthusiastic. If the caller is not understanding your strategy, he needs to end the call as we're waiting for him. Yeah, I'm sorry about that. Sammy, exactly, he's not selling any course of bullshit membership. No, I'm not. I mean, do I have it? Yeah, I do have those. I do have the membership, and I do have all that courses, but I'm not trying to sell it. I'm just, sharing information. Debating a strategy. Okay, we got that one. Better call Saul. All right, let's keep on going. He doesn't understand. Sammy again. Drop him. Yep. Got it. Good. Thank you there, Madeline. Johnny B. Thank you, Johnny B. Yep, got it. Thank you for dropping. Yep. Thank you. He's basically trying to say it takes money to make money. Well, it kind of does take money to make money, but the amount of money he was talking about is not really what I'm talking about. If my grandson can turn a profit starting out with $50, well, I'm sure anyone can. Okay, people on Wall Street want to make things complicated because they want you to go to them. Okay, we all enjoyed that. I thought it was kind of funny. Pre-law flipper, thank you for that. Cause and Astra, I enjoyed it too. I thought it was fun. It drives them nuts. Yes, it does. Yep, okay, I think we're done. Wait a minute. Do you make the trades that you find daily? Okay, JG Customs? No, I don't. The ones I find at night, those are what you guys suggest. That's not what I do. Okay? Now, I do have a paid service, and no, I'm not trying to sell anyone anything. But the thing is, okay, I trade once a week. That's usually on Mondays. I make all my purchases on Mondays, and I like to be out of them by Fridays. Okay? Do you make the trades that, no, I don't. Okay? Very once in a while I will. Like, I will do, what did we find yesterday? Yesterday we found USAR and Kohl's. Yeah, and I did do those on Monday. I did USAR on Monday, and I did do Kohl's on Monday. Merv Man wants to know what the 4 guarantees in life. Merv Man, are you ready? The 4 guarantees in life. Death, taxes, disappointment, and change. They're all guaranteed. Guaranteed things are going to change. It's not going to be the same as it was yesterday. It's going to change. It's guaranteed. Okay, are you going to die? Yeah, we're all going to die. That's guaranteed. Are you going to pay taxes? Hell yeah. They're going to find a way to screw us one way or the other. Are you going to be disappointed? Hell yeah. You're going to be disappointed maybe on a daily basis. What do you think, Merv, man? Mon ami, comment ça va, mon chéri? Okay. Thank you. What do we have over here? Where did ELF? I appreciate you doing this one. Thank you. You're welcome. I'd never buy it if someone will never put up $50,000 on the line, okay, type of money. Okay, thank you. Premiums are high because of risk. I'm going to believe that one too, Steve. All right. If it don't fit, must quit. Oh, no, don't do that. Corning is moving because the fiber optics that are going to be used for the data centers. Corning? Really? Morgan Stanley. Adam, we'll take a look at Morgan Stanley tomorrow. Okay, got that one. Okay. He's assuming that you're a millionaire. Yeah, I love it when people do that. They make the assumption, is Coca-Cola still worth keeping? Now, I didn't say anything about selling Coca-Cola or not. Let's pull it up real quick. I tell people the same thing over and over again. You have to decide what is right for you. I can't tell you what to do. But look at Coca-Cola. A year ago, we're down here at 66. Today, we're up here at 90. So the one question I have for you, okay, number one, it's not a profit until you take it. Now, there's nothing wrong with keeping it because Coca-Cola does pay a dividend, and Coca-Cola's dividend increases every single year. John Didier says, funny, he's not a millionaire because he owns a boat. He's right. I do own a big boat, and no, I'm not a millionaire. Bobby, Adrian, okay. 10 minutes, even lasts longer than that. Thank you. These calls are excellent instead of doing the same format every day. Thank you. All right. Happened with me and Hertz. It happened to me with Hertz also. I bought Hertz. It shot up. I held on to it. I made a nice profit off it because it went up, it went down, it went up, it went down, up and down. You know what? Every single week. All right, you understand? Thank you. Now, I'm not telling you what to do with your Coca-Cola. I'm just saying it's not a profit until you take it. Okay? All right? And you could keep it because they keep increasing the dividends every single year. I'm a mini beast. Yeah, I'm sick with Hertz. I bought it at 5. Ouch. Tokino. Take a look at Hertz. Wait a minute. What is Hertz at? HTZ. Holy cow. Dude, really? All right. You bought Hertz at 5. What's keeping you from jumping in at 209 and cutting your cost in half? Dollar cost averaging. What's wrong with that? Bobby, I gave Hertz the loan to stay alive in 2021. Good for you, Bobby. Underwriter Ron. Thank you, Underwriter Ron. All right. Okay. Yep. Mini Beast, 12,000 shares, almost 13,000 shares. What's wrong with jumping in again and cutting down your dollar cost average? I bought 6,500. 50 got me down, blah, 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 dollar cost. Okay. All right. Bobby, it's called distressed debt. Good for you. JP Morgan. It's JP Morgan Ferris. JP. Like jelly and peanut butter. JP. All right. Mini Beast. Got it. Good. All right. We're done there. Fan status is frozen. I have no idea what that means. Mountain View, California, another call. Holy cow. How are you doing today? Hello? Hello, and how are you today? Who's this?
I know you want to get off real quick, but I have this thing about the cost average.
Okay, what about...
all right, so what I found out. So we're doing a cost average. I've done it on different stocks. And so then when they sell, at least I'm in Robinhood. I use Robinhood. They do the FIFO rather than the LIFO. They do the first in, first out.
Yeah.
Instead of last in, first out.
Yeah.
Because they do the FIFO, I actually lost some money that way. So when you think cost average, so let's say someone buys a stock or the whole call and it's $3, and now the stock is down and you want to do the cost average and now it's down to $1. So you do the cost average. And so if it's assigned, they're going off what you bought the first ones at.
I'm going to agree with you 100%. You are correct. Do you know how you fix that problem?
No, that's why I'm calling it.
Okay, you actually have to call the broker and you have to suggest or you have to tell them, do not do the first in, first out. Do the dollar cost average. And then if you put all your stocks together, the dollar cost average, and you have a covered call on all the shares, not just one set here, one set there, when they're combined together, they will do the dollar cost average. But you have to call them.
So only the broker, okay, because we went into this a couple weeks ago about choosing the lots. And I understand what the lots are. I don't know if you do or not. But anyway, so doing a lot, the Robinhood does not allow me to do the most recent purchase lots. They make me do for covered calls, they won't allow that. So I have to actually call the broker to do it.
Yeah, once in a while you'll have that scenario depending on, it's an individual scenario. It doesn't happen with every single stock, just a few of them. But you do have to call them and say, hey, I understand the rule. This is what I want you to do. Because after all, it is your money.
Right.
Yeah. I'm sorry that you lost out on that one. And because had you called me earlier, I would have told you, don't do first in, first out.
Well, I didn't intend to do first
Yeah, it wasn't Robin Hood, it was the IRS.
Okay, oh yeah, that's true. It was the IRS, true. So like I said, I didn't intend to do it that way. Since then, because even after it was done, I'm like, what happened? And then when I found out, okay, so what you're saying, I have to actually call.
Yeah, you have to physically call them and say, do not do that.
Oh, Robinhood. Okay, well then I need to get a different brokerage because Robinhood doesn't have live people. And they're not easy to
Actually, no, it does. If you go to the bottom corner, you have to click on your profile, and then you click on your profile and you say contact service. And then when you hit contact service, it'll come up to the chat bot. In the chat bot, you say live operator, and then they'll come up with another piece of crap in the chat bot, and you have to keep saying live operator, and they say, all right, we will give you a call, and then you put your phone number.
I understand that, but then you have to wait, or I have to wait by the phone, like watch it because it's an unidentified. Actually, they use a system that you don't even know it's ringing.
Yeah, I know.
Until after the fact.
Yep.
So.
Now,
Okay.
there's an
all
old.
right, good.
Yeah, there's an.
Got it.
Wait a minute. There's an old saying: follow the money. If they can find a way to screw you, they will. So you have to be a little bit more diligent than they are. Say, give me a call, and then you have to have your phone there, and you have to play by their rules. So once they actually call you, say, "Oh, nice of you to answer." But yeah, you actually have to talk to someone there and say, "No, I don't want first in, first out." You're welcome. How do I change first in, first out? Taquino, you actually have to physically call the broker. You actually physically call the broker and say, dollar cost average, I do not want first in, first out. Okay? All right, so that being said, I'm sorry, you guys, I don't have enough time to go through everything. I wish I could. No, I could, but I'm not going to lie to you. I don't want to. It's 11 o'clock. I've been on since 8. That's 3 hours. So, for those of you I didn't get to your question, sorry about that. Some stocks are like this on FinViz. Thank you there, Mr. Bell. Go rest. Thank you. Thank you. So for you guys, I didn't get to your question. Sorry about that. Holy cow. Ooh, there's some good questions there too. All right. That being said, you guys will do this all again tomorrow. Thank you for showing up. Thank you for the calls that came in. And for those that... those that were rather challenging, hey, it is what it was entertaining for the least bit, I love listening to those kind of people, and I love them trying to convince me that I'm wrong. Really, seriously. I love someone trying to convince me that I'm wrong. If you are wrong, yeah, don't do that. That's not good. All right, you guys have a great night. We're going to do this all over again tomorrow. Get rid of that. Go up to here, and we're going to do this.
It was a gift. I resented it for 3 weeks.
Then
I filled the bowl with water, dropped the grapes in, and
song.
I wasn't ready for that.
All right.
I watched my daughter eat half a bowl of grapes this morning before I used it.
You dream in stars, then dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and brain. Julie knows that fire in your soul, the kind that lifts the broken heart. James, you reach the skies, no one dares. In your hands, the future's caught unawares. That's what the hell were you thinking? You laugh as the yacht keeps the daylight blinking. Every day's a quest, not some disguise. With James in the storm, the dream never dies. Retired, you say, with a wink and a grin, but the podcast is rolling, pulling us in. Your compass is love, with your kids as your guide, shining seas wide, with vision and pride. Julie's here, who adores your spark, the dreamer who lights up the dark. James
pull you down.
You're the wild, the wave, the crown. James, you reach the skies, no one dares. In your hands, the future's caught on unawares. That's to know what the hell were you thinking. You laugh as the yacht keeps the daylight blinking. Every day's a quest, not some
Yes, I did sell my birds.
disguise. With James in the storm, the dream never dies. World while the rest of us sleep.